Hey Goku, you know I just had the flu? Yeah, you remember a few months ago, I took that flu shot? Did I get the flu because of the shot, or did the shot just not work? Look at me. No, I feel better. I just wanted you to look at me. Hey guys, welcome back to the After Hours. I'm the A-Tail Beast, and today we'll talk about volume analysis. Now when we talk about volume analysis is pretty much the past. We understand that the stock market is forward-looking. When we talk about a forward-looking market, we're looking at the past to predict a little bit of the future. And we understand that in the market, you don't have to know the future to make money. You just need to know how to manage your risk based off of what happened in the past. And when you do that, the odds are going to be in your favor and the upside is going to outweigh the downside. If you see an opportunity that's close to 50-50, if you make your losses to the point where you lose, even if you did lose that 50-50 or above, then in the long run, you still come out positive. When we look at volume, we understand that volume inside of a stock is shares that have been bought and sold. It's the opening and closing of a cycle that equals one volume. So if you have 10,000 shares that have been bought and sold, you have 10,000 volume. With that 10,000 volume, in context, you can tell how it will affect the stock. On an average day, if you see a stock is running 100K per day, and then suddenly one day this stock is at 1 million, that may lead to a continuation. Now, when we look at continuations, we understand that things go from high to low and low to high. When you see interest spike inside of a specific stock or a sector or a type of news, you can see this as a crowd starting to roam towards this subject. With this subject, you have to understand that there's no legit catalyst. It's just going viral. People think this is popular. People like it because others like it. And what you have to understand is that you can make money from this interest. You don't actually have to understand a pattern, but you just have to understand that this is a hype. And with this hype, there is going to be money. So when we look at the market cap of a stock, we understand for a price to go from $1 to $2, it has to double in terms of the market cap. And the market cap is the total amount of money inside of the stock. If we see a stock go from $1 to $3, it technically went up $4 from its initial investment. And the way we can profit from that is understanding the volatility, the volume distribution. If we figure out the reason why this started to spike, we can ride that trend. When we ride a trend inside of a stock, you have to understand that the trend is your friend. The trend may start here and the trend may end here. Now it may end with a reversal or it may end with a fade, something a little less subtle, but eventually it comes to an end. Your job is to figure out when does the volume come into the chart. So when we trade with a very strict criteria. That's because with all the stocks out there, there are several scams. And if you're trying to follow the crowd and take money from the market, you have to understand when is it safe to take the money from the market. And finding that point, you have to have experience. And even with experience, you have to understand that it all comes down to risk management and trade selection. And now, because of that, the biggest thing you can learn is volume analysis. This pretty much means that you are taking your technical analysis and following patterns. When you combine both of those, that gives you your basic edge. You can use the first 5-minute candle as a standard for how much volume is a solid candle inside of the trading day. Because in that first 5 minutes, you see high frequency traders and financial institutions, algos, and all the big players inside of that first 5 minutes. It's chaotic. Usually you want to wait till after that first 5 minutes where the stock starts to change its direction and the trend starts to actually form. Before that point, most retail traders could not trade unless they had a broker or they were a professional trader.
Interested in trading like Stevendux? It all starts with choosing the right broker. Dux Trading has partnered with Centerpoint Securities to supercharge your trading journey. By joining Centerpoint Securities through Dux Trading, you can unlock CP Edge, a suite of top-tier trading tools valued at over $6,000 right at your fingertips. Gain an edge in your trading with real-time scanners, cutting-edge news, and a personalized trading journal. Experience trading like never before, with superior short inventory, dedicated support, buttery smooth trade execution, and the opportunity to earn interest on any of your idle funds. Plus, enjoy competitive pricing that suits your trading style. Ready to elevate your trading? Simply click the link in the description below to get started. Now, let's dive back into the content.
So when we look at the volume distribution for the morning itself, we understand that 30% of volume estimates usually happen in the first 2 hours. And because of that, we know that most of the volume is in the morning. And during that hour, there's several different volume distributions, depending on whether it has a resistance or a consistent resistance or even no resistance. It could be a downtrending chart. It doesn't matter the catalyst. Every time, there's always a different volume distribution. But once you figure out your favorite type of distribution, you can put a risk management attached to it, and you can make money from that volatility. So when we look at stocks and when we see one has a resistance on the daily chart, if this stock breaks that resistance, you're thinking that it's going to continue. That's because when it breaks that resistance level, volume comes into the chart even more. There's a lot of things that bring volume into the chart. There's consolidations, there's breakouts of previous resistance levels, and then there's also parabolics that can happen for any kind of reason. Now this week, we saw DWAC start to move. Now we all know DWAC is associated with Donald Trump. Donald Trump, he officially made the first big step inside of 2024, where he just won the state of Iowa. Now, when we talk about presidential elections, we understand that anybody can move the stock market, but especially the president. Now, DWAC was one of those stocks that went crazy when Donald Trump was doing something. Now, during that time, that stock also had sympathy plays. One of those sympathy plays was PHUN. So when we look at these two stocks, I'm talking about DWAC and PHUN, and both of these are related to ex-President Donald Trump. And that's all we need to know. For us to make money, we just need to follow what happens inside of Trump's career, and then we can invest appropriately. If we look at the daily chart, there was no news for a long time. The stock was either downtrending or it was going sideways. It was only till recently, in the past week, that we started to see major moves. And the only major move that we saw was in Trump's candidacy. Now, the same thing can happen with any other stock related to their management, their fundamentals. They go double for penny stocks. All the small cap stocks have bad fundamentals. So if you can give a little bit of promotion to things are going to change, or maybe even a larger company supports that smaller company, you can see these type of parabolics. But usually they're short-lived and overhyped. That's why we like to short them. Now, one of the things that happened this week was AGFY. We understand that this is an agricultural stock. Now, this was actually a micro float, so we don't really like to deal with it a lot, but it gave us a textbook setup for a gap up short. And it was a lower high that as soon as this opened in the morning, there was a confirmation that matched the pre-market high. At that point, we knew the confirmation of the downtrend was supposed to happen. After this gapped up overnight, it hit a double top at the open, and then it proceeded to gap down throughout the rest of the day. And that's all we really needed. So when we look at stocks like this, we see the stock went from $1 all the way up to almost $3. If we look at the psychology on this, there was a pre-market high and then a consolidation under that point. In that consolidation, we know that momentum goes into the stock, and then it was supposed to be a breakout of that pre-market high. Well, when it broke out, it ended up being a fake out. At that point, it came back down, and people were thinking, oh, maybe the trend is broken. It didn't break out as much as we thought. When it went up and showed a double top at that pre-market high point, that was a double topping pattern. When you have a micro float and you see a topping pattern that was confirmed, it usually downtrends very fast and very far. Now, volume distribution, it can get as simple or as complicated as you want. You could just be looking at the first 5 minutes of the day and you'd be like, that is the standard candle I want to use for the rest of the day. If something gets even close to that amount of volume, I think it's going to be a top or a bottom. Or it could be, hey, this stock is trending in up or down direction. When the volume starts to get a little bigger than normal, like the normal for today, that's probably a sign of a topping or a bottoming pattern. And because of that, I can use that as a reversal point, especially if we also add on technical analysis. When we look at the volume compared to price, we understand that there is a specific volume distribution that is unique to the price and affordability of that stock. All right, guys, that's all I got for you today. If you liked what you saw, hit that like and subscribe button, and I'll see you in the next video.